Welcome everybody to this week's Finance Friday. I'm Jackie Cameron, your BizNews host, and with me today I've got Fred Razak, who is a global trader. Very warm welcome to you, Fred. Thank you for joining us here in our webinar today.
Thank you, Jackie.
So just a little bit of background. We're also expecting Magnus Heystek in a few minutes, but in the meantime we're going to start chatting to Fred, and the idea of our webinars is to keep things very interactive. Before we take your questions, I will just tell you a little bit about Fred. He's with CMTrading, which is one of the largest global trading networks in the world, isn't it, Fred?
Yes, they are a broker,
Okay.
actually, to be more specific.
Okay.
That offers broker. Yeah.
Yeah, continue.
No, they offer basically the availability to trade the financial markets. And since today everything is quite a small market, everything has really become small, as we've spoken earlier this week. So this gives really a lot of opportunities for people who haven't had access to trading the financial markets previously.
Great. And now, welcome, Magnus.
Yes, good afternoon, Jackie, and hello, Fred. Good afternoon.
Good afternoon, Magnus.
Thanks for joining us. So Magnus is a very familiar face to many of the BizNews visitors. He's a leading personal finance commentator, has written many books, and he's also a financial services entrepreneur. I think, Magnus, have you got about 8 billion rands worth of assets under management now in your Brenthurst Wealth Management?
If I check the till, it should be around that, Jackie, yes.
Okay, well, that's very impressive. Now, Magnus has been pushing or encouraging people and showing why it's been such a good idea to invest offshore. And so we're probably going to pick up with him quite a bit on that. We've already had a lot of questions focusing on where the best places are to invest offshore. And Fred is obviously has this huge experience in the global trading environment. Before we take the questions, Fred, there was a very sad story that was quite widely publicized this week about a young man called Mr. Kearns, and he was very much involved in day trading, and he seems to have misread his statements, and then he killed himself. And so there's a lot of concern that day trading can be quite risky. But on the other hand, we've heard from some of your colleagues that many people are generating some kind of income in these tough times. So perhaps you could just give us a brief overview of what day traders.
Okay,
yeah.
so let's take it back a little bit. I mean, day trading has been around for the centuries. Okay, I'm sure Magnus will tell you that every investor, every trader has ever read a book about trading. They've learned about a person by the name of Jesse Livermore, who was really the father of technical trading. Now, I'm not saying that technical trading is for everybody. It certainly is not. But for those that have a knack for it, okay, and for those that develop themselves in trading, they could make a very profitable income and a very successful career out of it. The advantages of it and why it's very difficult that we see these type of stories is that there's no filter system really. So people who don't have necessarily what it takes in order to make it, nevertheless seep through the system, so to speak. And so this is why you have these type of unnecessary and also unfortunate situations.
Thank you. Magnus, what are your views on day trading as an alternative to investing in a fund?
Many people try that, and I often get calls from people saying, can I do day trading? Can I make a good living? And is it the shortcut to riches? And my answer is, for 90% of the people who try it, they'll probably fall out of the bus at some point. But the 10% or even the 5% who remain and dedicate themselves and upskill themselves, you can make very good money in day trading. But you need to know what you're doing. It's not a hobby. It's a full-time job almost. And you must approach it like that. I find that people get sucked into day trading when the markets are running, thinking, it's easy to play the forex markets or the equity markets. If you don't apply yourself full-time, you probably will burn your fingers.
Do you agree with that, Fred?
It sounds very right. It's a professional job, and most people don't take it as professional, like Magnus is saying. They take it as a hobby. And when you take it as a hobby, it becomes a hobby. But if you take it professionally, okay, and you have a structured system, okay, that you commit to, then over time, it does, regurgitate some of the profits that you can see. And so between Magnus and myself, we're both in the same industry. We're both in the same business. Magnus's time frame is a little bit different than mine, obviously, but nevertheless, Magnus will tell you that he has an edge of why he enters the market. And so too, I have an edge, okay, of why I enter the market as well. So, you know, ostensibly, you might be looking at different time frames at different parameters, but at the end of the day, you're trading the same markets.
Thank you. So we've got our first questions already, and the first one is for Magnus, and this is from Marius, who's working in the Middle East, and he's obviously a South African, and he says he's 55 years old, he's working in Dubai. What are the various options with my pension and provident funds? He doesn't name the companies that they're with, but he's got some funds with Allen Gray, Coronation, Denker, and Stanlib. That's quite a big question. Maybe just in broad brushstrokes, you could give an assessment of what you think he could be doing.
I think what he's trying to get to is his money has been in pension funds, provident funds, which are subject to Regulation 28 of the Pensions Act, and that has acted as a massive drawback the last 5 to 10 years for the South African market and the South African funds, which are handicapped by the fact that they can only invest 30% of their money offshore, with the result that the returns the last 5 years have been between 0 and 4%. At the age of 55, the caller Marius can do certain things, and we've been recommending that you should take your money, if it's an RA or a pension preservation fund, move it across, take the tax-free portion out, get that into your pockets, and invest that aside, and then the balance you put into a living annuity where you can get 100% offshore exposure. I've done that with my own money 5 years ago. My stuff is all in offshore funds, growing at 20 to 25%. So I think that is Marius's question. At 55, he needs to exercise that option and get it into better performing funds.
Thank you. And then on that note, Magnus, you sent us some graphs about how the JSE has performed since President Cyril Ramaphosa took over. We started off with a period of Ramaphoria, and that then sort of fizzled out a bit. And you think that it's still a good idea to keep investing offshore?
Well, if you go back 2.5 years, when Cyril Ramaphosa took over, we had the euphoria, and we had every fund manager and every economist and every politician saying, this is the start of a new era. And people were predicting growth of 5 to 6%. The Rand will go to 10, and it was just an extremely positive scenario being painted to the average person. And I thought, being 2.5 years down the line, let me just check what the results have been. And to my horror, I found that the JSE in those 13 months has given you 0 growth. And in dollar terms, it's given you minus 28. And very few South Africans realize how poorly the JSE has done. And the media has not talked about this. I couldn't find any comment about that. And the shock and horror was from that massive optimistic scenario painted. We have had no growth. The economy is tanked. Unemployment is at 40 to 50%. And world markets have grown by double that in barely 30 months. And this is damaging pension funds, retirement funds, extremely hard at the moment, whereas the offshore funds are galloping ahead and creating wealth for people.
And Fred, here's a question for you, perhaps. This is from Devon, who asks, he says he hears that Asia is where the next exciting trading opportunities seem to be for day traders. And what would you suggest for people who want to look in that space?
So my first question is, what is the current one that he thinks is the exciting place that day traders should be trading? Listen, right now, it's hands down, it's the United States. I mean, if you look at some of the major stocks like Facebook, the FANG stocks, which is Facebook, Apple, Amazon, Netflix, and Google, plus Microsoft, you're looking at intervals that are completely off the charts. I mean, no one would have expected this amount of growth over the past 4 or 5 years. And in the current pandemic situation, we're seeing new all-time highs in the NASDAQ. Okay, so the US has 2 markets as opposed to the JSE. The JSE, obviously, as Magnus was mentioning, it's just, it breaks my heart to see that it's not breaking out higher. Now, I was also watching the Rand about 2 years ago, when there was the change in premiership in South Africa, and I was also very hopeful that it would hit 10 versus the dollar. Whereas if you look at the States over the past 4 years, the Dow Jones went from 18,300-ish level to 29,400-ish level in an interval of 4 years. So it's almost doubled. So really right now in this current pandemic situation, you see the NASDAQ making new highs, you're seeing Microsoft, Apple, Amazon all making new highs. And this is not small companies. To move these type of companies to new interval highs takes a lot of money. So for right now, my eyes are only in the United States.
Very interesting. And there's another question that ties into this. It is for Magnus, but perhaps you both want to weigh in. MSCI World Equity or NASDAQ feeder fund, what would you go for? Magnus, perhaps you want to pick up on that one first.
Well, they're two different. I mean, the MSCI feeder fund gives you exposure to all the equity markets in the world. It will not give you the same kind of growth in a bull market that NASDAQ will do and has not done over the last 10 years. As Fred said, it's all been in the US of A, and that's what we've been telling our clients, and made huge pots of money by being in biotech, technology, AI, and all those things that are running at the moment. The MSCI will just give you a broad return equivalent to the market as calculated by the MSCI. So it's two different funds. If you like a bit of risk, I would stick to the NASDAQ, and I look at certain specialist sectors of the market. Otherwise, you become a generalist and just say, I want the growth of the market.
Thank you. And your response, Fred?
I agree. That's what I've been mentioning. The NASDAQ has really been the focus, and every single day I do the daily review, and every single day I sound like as if I'm just like a broken record. NASDAQ hit all-time new highs. And the fact that we're doing it under the current circumstances, okay, in the environment that we're in right now, is just unprecedented. I would never have thought that we would go from March 18th, where we hit a low, okay, on both the Dow and the NASDAQ, to where we are today. We're looking at, for example, Microsoft going from $135 on March 18th to $207 just yesterday. It's almost a double, in just 2 months. Unbelievable.
Particularly when you consider the global economies in such tatters, it's sort of, there seems to be a bit of a mismatch, doesn't there?
Yep.
So then
Absolutely.
we've got another question here from Omar, which is also tied to that. He says, with the S&P 500 and particularly tech stocks having rallied and are seen as overvalued, do you keep investing in them or do you pause? What do you think, Fred?
Okay, so this is always the challenge, right? Because stocks keep on making new highs and then they, kind of slide off. The intervals are obviously way beyond anybody's expectations. So you also have a presidency right now and the backing of the presidency that's really pushing the economy to take it higher, okay? So with that said, I would wait for pullbacks. I would also keep a very aggressive stop loss on it, especially since we're in the summer trading right now, which is lighter volume. So I would really like to see what happens in the next 5 months, because the next presidency is really going to dictate which direction we're going in both the NASDAQ and the US markets.
Very interesting. Thank you. And then here's a question for Magnus. Please, can you give us your opinion about how you see the future of the residential property market in Mauritius? So, slightly different topic.
Wow, that's, I'm going to give you a biased answer because I own property in Mauritius and know the market very well. There's an influx at the moment of South Africans moving to the island, which is supporting the residential market. I mean, the market has been affected by the COVID virus, no question about it, and particularly the top end of the market. But the market has moved down to the more affordable market, and the Mauritian government has just reduced the entry level in order to obtain residency. It's now $375,000, which suddenly makes it much more affordable. So there are a couple of very attractive smart city developments in Mauritius, either in the north or in the west, and then also in the east, one or two, which makes it very affordable for South Africans to move there, get their residency, and also move their estates to Mauritius and in order to escape estate duty. So the market is solid and potentially doing better when the COVID issues are resolved.
Thank you, Magnus. And then here is another one. This is more like, on the forex market, so this is probably for Fred. This is Carl, and he says he's concerned about the future value of US dollars. Apart from gold, what other foreign currency should one invest in? For example, euro or Norway krona? What do you think?
You know, this is the one that I scratch my head in because, you know, whatever we're doing, if you look at the majors, let's just focus at the majors. We're looking at the Japanese yen, you're looking at the euro, you're looking at the British pound, and you're looking at the US dollar, okay? And all of them have some sort of issues with them. The GBP has its Brexit issues still looming in the back, okay, about how that's going to actually play out. The euro, because they've been in somewhat of a recessionary situation, especially now that they're hitting with this pandemic, especially the southern states, okay, which is really very scary. If we look at the Japanese yen has been in stagflation for the past, I don't know, 20 years. So it's really been, it's been a very difficult situation. And the US right now, because of its very aggressive stimulus package, is playing a very, very interesting card, okay? So at the end of the day, it's which one has the least issues. And that's the way I'm gonna look at it. And so you'd be interested to note that there may be secondaries, okay, not the majors, that may come out of this whole situation much better off than the majors. So that would be what I'd be looking for in some of the other currencies to see which one of the emerging markets actually will have some more stability.
Interesting, and that feeds in neatly to Letitia's question. She says, how do I actually make money trading in the Rand? I've never tried trading and would like to understand how to make money by taking baby steps in foreign currency trading. Is there such a thing as baby steps in foreign currency trading?
Absolutely. I mean, that's what it's all about. At the end of the day, we're not, you know, no one is ever saying that you should take your hard-earned money and, you know, play your luck. The point here is to, on a regular basis, to build a trading plan. Okay, that's what I recommend to our clients, and that's really what I've been taught over the years, and that's what's really been consistent over the years. So because you are a little bit biased also, okay, and it's also because you have a tendency to know your home currency, then you really have a pulse on the market to know, you know, if there are certain strikes coming out, if gold is not trading as well, okay, that's usually an impetus for the currency to actually get beaten up. So, you know, you are an advantage, for example, as to anybody else in the world because that's your home currency. So yeah, absolutely.
Okay, thanks. What do you think, Magnus? Should people be taking baby steps in forex trading?
Just don't get up and go for with an open position, go and have a cup of tea, because when you come back, if you're trading the Rand, but particularly, right, you can either make a fortune or you can get wiped out. The Rand is extremely volatile, and sometimes my experience with the Rand is what people think are the obvious factors driving the Rand either up or down often are not. The rules keep on changing as far as the Rand is concerned. Sometimes bad news pushes the Rand in one direction for a certain period of time, and then for some reason it turns, and then bad news pushes it up again. So it's a very, very tricky game. I've tried it in the past, and as I said earlier, if you don't do it in a very disciplined way and follow the rules, as Fred says, rather stay away. My experience is from people telling me, oh, I got sucked into currency trading and I've lost a lot of money. And that normally is the case, what happens.
Okay, thank you. And then there's another question for you, Magnus, from Zanele. And she says, what are your thoughts on the new Satrix MSCI China?
Yeah, the one that's just been launched, the China Fund, it'll give you the returns of the China MSCI China. It's a nice addition to Satrix's range of products. If you believe that China, and China in fact has done quite well this year, and over time has done extremely well, it's something that you can put in your portfolio. If you think China is going to be the next dominant economy in the world, it might be time to be buying. You can either buy the the Satrix products. There are some good Chinese equity funds on offer, and we've got some great Chinese funds that are run by South Africans. A guy called, I think his name is Darby Kricher, runs the Cederberg South China Fund, and that's done 17% in dollar terms for the last 5 years. So to answer your question, it's a cheap and easy way to get into China.
Thank you. And then here's another one. This is from Omar, and he asks, the last 5 years offshore would have seen high growth. However, many are saying that with the Japanification of developed markets, we are going to be stuck in a low growth cycle for at least the next decade. What is your approach?
You know, you've got to be driven by the facts, and you've got to be driven by the charts and what they are telling you. As Fred said earlier, he does his updates every day. That's what I do every day. And the charts will tell you something where I always believe, and I know it's a bit of a hackneyed kind of expression, but there's a bull market somewhere in the world. You've just got to go and find it. And it depends on what the markets are doing at that point in time. Yes, we might go the Japan route and have no growth for 10, 15 years, but there might be other parts of the world that are experiencing growth. I mean, it's a question of finding them. And for that, you have to follow the markets very, very consistently, and most people don't.
Right, thank you. And then we've got another question for Fred, a follow-up question from Pete Lowe, wanting to sort of tease out your ideas a bit more on those secondary currencies. So hoping for a bit more of a steer on where to invest on the currency side of things.
So this is the thing about secondary currencies. It's really a reflection of the economy, right? So this is going off of what Magnus is saying, is that, you know, if you look at China, they're a expanding economy, and they're going to still expand, you know, despite what's going to be happening. And it's still a question mark to a certain degree. But there are certain countries that I think that have some sort of, and you'll be surprised, I would say some of the Middle Eastern countries that have some sort of, you know, backing, either because they've had natural deposits actually being found recently. So there are a couple that I would be watching a little bit more carefully. Something like, you know, some of the African states, believe it or not, I think Africa has, you know, a tremendous opportunities just across the board. You see what Rwanda has done over the past 10 years. So nothing is ever happening from day to day. But if you look at a 10-year time frame, okay, and you take some of these countries that are now just popping up with some of their, you know, either their high-tech businesses are kind of just coming together, or just the expansion of the economy just in general, I think you'll be surprised at some of the countries that you'll see in the next 10 years.
And there's actually a question that ties into that for both of you. Somebody wants to know here, how do you see the rand in 5 to 10 years time? Is this a one-way?
I like Magnus have that one.
Magnus?
You know, it's driven by many factors. The rand is driven by the commodity cycle, our balance of payments, and then politics, and also, very importantly, people always only look at the rand. You've got to look at the big dollar cycle. What is the dollar doing? Is it moving up or down? So to a large extent, and sorry, to finish the sentence, the dollar versus the emerging market currencies, you've got to look at all those factors, and to make a projection 10 years into the future is an exercise in futility. The trend has been for the rand to weaken over the last 10 to 15 years, but with periods of growth, which have surprised a lot of people. So again, coming back to, you got to stick to the facts and what the facts are at that given point in time. And you also secondly have to acknowledge that any forecast about the rand in particular has a very large percentage of chance of being wrong. And you know, even the smartest guys, there are big banks, they sit there all day trying to analyze the rand, and a lot of them get it wrong. We get it wrong. I get it wrong. But it's not only a rand call to invest money offshore. It's also getting involved in other opportunities that we don't have in South Africa. So I don't even look at the rand. When I have money, I buy offshore stuff like the Nasdaq, and that has actually worked very well.
Excellent, thank you. Here's another question. This is from somebody who says, I'm 35 years old, living in South Africa, currently contributing the maximum 27.5% of my income towards my pension fund, with the remainder of my money going towards paying off my bond. What are my options for offshore exposure? Should I continue contributing the maximum towards my pension, or should I rather pay more tax and start investing offshore? Magnus, what do you think?
You know, that is a very tricky question, and in whichever way I answer it, I'm going to be criticized. I'm finding a lot of young people are saying, I want to be in control of my own pension, and I will invest offshore. It only works if that investor is extremely disciplined and sticks to a scheduled plan. Hopefully the Reg 28 issue will at some stage be relaxed so that pension funds can take a bit more money offshore. That will help the situation. But now we have talk about prescribed assets to fund the deficits and the structural payments that need to be done. That is scaring a lot of people off from getting involved in pension and RAs. And if they are disciplined, probably over time they'll be better off investing it offshore. But there's a huge caveat: don't touch that money. The one advantage of a pension fund is you can't touch it for a very long period of time. And sometimes people need to be protected against themselves.
Very wise words. Thank you, Magnus. Now, there's another question here. Now, in South Africa this week, we heard that Alan Gray has just had a bit of a shake-up. There's a new investment officer stepping in. And there's a question here from Judd who says, your views on the performance of the Alan Gray offshore funds, ? What do you think, Magnus? I think that you've pointed out that Alan Gray's performance has been, to say the least, perhaps a bit lackluster in recent years.
It has been. I mean, and the problem with it's their business practice, but when you invest in any Alan Gray fund in South Africa, they feed it into their Orbis fund. You don't have any other choice, which to me is a bit of a limitation. That works when that fund is doing particularly well, but the last 5 to 7 years, the Orbis fund, which gets all the Alan Gray money going offshore, either via the existing funds or directly, has actually not done very well, has underperformed its benchmark, if memory serves me, now for 5 years, 7 years. So, and if you compare it to the other global funds that are available to South Africans, they have underperformed quite substantially. Now, I don't know if the question is related to the changes at Alan Gray. I don't think it's got anything to do with that. But Alan Gray's funds have a specific style. They value funds. And the value fund investment style has been out of fashion for 10 to 12 years now. And I think a lot of Alan Gray investors don't know that all your offshore money goes into one fund, which from an investment advisory point of view concerns me a little bit, that you're putting all your funds with one company in one fund. I like the variety that other fund managers can bring to the table.
Thank you, Magnus. There's another question here from somebody which ties in with that, and they want to know when things look like they might change for value funds. So it's a bit like reading into your crystal ball, but do you think people should hang in there?
You know, that debate has been raging for 10 to 12 years, and every now and then there's a little upward movement in the value fund starting to catch up. We saw that earlier this year when the markets melted down for a week or three, the value fund started kicking in. But sadly, because of NASDAQ doing so well, and that's not where you're going and look for value stocks. Again, the value funds have not done well so far this year. So it's again, timing is all important, and I don't see it happening quite soon, but it can at some point start changing. Depends on the market conditions.
Thank you. Now, this one, perhaps for you, Fred, I don't know how closely you watch these kinds of developments with a view to buying and selling. I suspect you probably do. A question from Andre, who says, if governments default on the payment of debt, what effect will it have on the rand? And when the government approaches the IMF, what will the effect be on the rand? So in other words, with all this debt that's,
that could be catastrophic. I mean, you know, before the question you asked is what the 10-year horizon is for the rand. And just one more point to add to what Magnus was saying, and he was, you know, he has a much better fundamental view of it. I would say the political climate is very important, and some of the issues that, you know, that I understand that are having in the South African government, I think is going to add a lot of value to that. And if it does default on some of these loans, then it's going to be devastating.
Okay, so how would you place yourself with your trading then?
Well, I mean, we look, we look at a very short time frame. We're not looking from a 10-year or 5-year. We're looking, for those type of volatility opportunities like we had just 2-3 months ago. And some of my friends who, back east are, trading some of the same intervals that they're trading in the same style have made tenfold what they're normally making on a regular basis. So, this type of volatility is what traders are looking for. In intraday and either weekly or monthly to make those type of profits.
Thank you. And then Vim says, please let's go back to the SARAs versus offshore investing issue. He says, is it worth foregoing the tax advantage of investing in RAs? And then moving offshore.
Yeah, that's the question that is very difficult to answer. I mean, it's a case of investing in a disciplined way, getting tax relief now, or not taking the tax relief now, investing it into something that hopefully will give a better return, and at the end of the period, you have more capital and you're not taxed at that stage. And there's a huge debate in the investment industry about this, and there's so many variables that I cannot say it's black or white, or it's either this or that. There's so many factors to consider. If you are perhaps a young person starting out in life, you're a disciplined saver, and you might end up working elsewhere in the world, it's perhaps not wise to put money into an RA, but to put it into a discretionary money which you can control. It's the question of control which gets to a lot of people. We saw it now in the COVID crisis in South Africa, and in fact I wrote a little piece for BizNews. A lot of people, in fact my restaurant guy around the corner asked me, what can I do? I've got R1 million sitting in my RA. I'm not 55. I need some cash desperately to keep my business going. And up to now, government has not yet made a decision whether you can take a once-off withdrawal or a loan or use it as collateral. And that's the kind of thing that will cause this restaurant owner to think twice about putting money into an RA again, because when he really needs the money, he can't touch it. And a lot of young people are looking at this and saying, thank you, but no thank you.
Yes, that's a very valid concern, particularly with this ongoing uncertainty. Thank you, Magnus. There's another question here. This one is from Mark, and he says, what does Magnus advise in terms of splitting investments percentage-wise between equities, gold, cash, and property? I'm not sure if he means just South Africa or globally, but perhaps you could give a bit of a broad brushstrokes picture on how you do your asset allocation, or what the rules of thumb are for that.
There are no rules of thumb. I remember years ago, Medboard ran an advertising campaign saying 1/3 cash, 1/3 equity, and 1/3 property. And a lot of people thought that was gospel. Now again, if you exclude your primary residence, and what the last 10 to 15 years has shown, that physical property has not been a great investment by virtue of the fact that it's illiquid. Fred and I'm assuming Fred likes liquid markets, but which he needs to if he's a trader. I like liquid markets. I like assets to be in a liquid form, that if the market turns, like we had with the South African commercial property market, we started taking our clients out of commercial property 2 to 3 years ago, and you can't do that with one physical building, and the same applies on a global basis. So excluding your residential property, I would say you construct a portfolio with about 70% equities. Bonds at the moment are not attractive, except South African bonds maybe. And gold is looking very nice. We have increased our allocation to gold to about 15%, and that has worked very well. Guys have made fantastic returns. Gold, NASDAQ, and a bit of cash, and that's done very well for them. And also avoiding the train smashes in the commercial market.
Thank you. Just on the subject of bonds, we had one of our, I'm sure he's in the webinar now, Mervyn sent us this question, and Magnus, one of your colleagues wrote an article on bonds which was published earlier in the week on BizNews. So I'm assuming this is a bit of his interest is piqued with bonds, and he just wanted to know a bit more about the performance of bonds and understanding the graphs. And so if you could just give just elaborate a little bit more on why you're not particularly excited about bonds currently.
Global bonds, I was referring to. Local bonds are quite attractive. Okay. To answer Mervyn's question, the way to answer it is to say that A government bond or a corporate bond is merely a very long-dated IOU. The government comes to its people and investors and pension fund managers and says, I need money. I'll pay you back over a 20 or 30-year period of time. The bond is the IOU, and over the 30 years, I will pay you the coupon interest that prevails at the time when we issue the bond. So let's assume I issue the bond at 10% for the next 30 years, that government will pay back, and they've never defaulted on that. So you get your 10% on the initial coupon. The price can go up and down inverse to interest rates and depending on economic factors, but there's an underpin of income coming in, and then you either have capital growth or capital reduction on the value of the bond. But bonds have been a nice place to be for South African investors, between 8 and 10%. And again, our bonds are very attractive to foreigners because in the search for yields all over the world, I mean, Fred, if he's been in the market as long as I have been, I don't think he's ever seen a situation where 1/3 of all government bonds in the world trade at negative interest rates. Now, I can't get my head around that. So what's the point? People are giving money to their governments and they're saying, it's okay if you give me back less when this bond matures. Now, I think that's one of the reasons driving our equity market is because the bond yields are so low, and that's distorted valuations. But to come back to Mervin's questions, there's some very good bond funds. You put your money in, you can take it out when you want to, you can take out half of it, and it's giving you a very nice solid underpin to your investment portfolio.
Thank you. Fred, do you look at all of the bond markets?
We do. I mean, it's a natural place to look, especially when it affects the stocks of the bond of the banks, obviously. So, you know, in light of what, you know, Magnus is saying, you know, the only thing is that there's a little bit of a tug of war right now. I think each country is really scratching their heads about what they're going to be doing about deflation or inflation in the current market. And I think, you know, COVID-19 is going to really have a impact on that for 2-3 years. I don't think that that's going to come out, you know, with any sort of certainty. So, you know, the fact is that bonds have traditionally showed some consistent results. It's always been, you know, something like bonds, gold, you know, which are more averse to the general markets of what's happening, because, you know, at the end of the day, it's the governments that are backing these type of loans.
Thank you. Here's a more practical question. Magnus, I'm not sure you can answer it, but Pritesh wants to know, can the South African government force you to bring back any money that has been sent overseas already? If they can find it, probably.
Yeah, in theory, they can create such a law and tell you, bring back all your money, and if we find you, we'll put you into jail. But in practice, that will be very, very difficult to implement. And someone did ask me this question: if a government says bring back your offshore money, and you just write back to them and say, what offshore money? But they can. We've had court cases, the Dave King case 10-15 years ago, where there was a substantial amount of money. Government, the Reserve Bank and SARS chased Dave for a very long time, but they got back about R1 billion. But they can do that in theory with small people, but you can hide money so easily. It disappears into trusts, various bank accounts. You can put it into maiden names, and it'll be impractical, and no government will be that stupid to try and issue such a decree and tell people bring your money back. I think the Zimbabwean government tried that, but that even forced people to take more money out of the country, which just disappeared offshore.
And as we can see in Zimbabwe, that's caused a huge financial crisis now, the whole issue around foreign currency payments.
Well, that's the danger many South Africans could face if we have a debt default 5 or 7 years from now. There'll be a shortage of dollars, and there'll be a scramble for dollars and cash. And the Zimbabwe is perhaps an extreme example of how not to manage an economy. But there is a fear under many South Africans that we are moving in that direction. And if that is your concern, then you should start, irrespective of the current value of the exchange rate, you should start building up a dollar account somewhere in the world that is protected from such an eventuality.
Thank you. And then we're going to wrap it up soon because our hour is nearly up. So we'll take 2 more questions. And the first one is from Jean-Pierre, who says, I am convinced about offshore investments, Magnus, but do I invest in offshore funds in rands, or do I first convert, for example, to US dollars and then invest in offshore funds? What would your suggestion be there?
My preference is that if you have enough capital, but remember the offshore companies and platforms insist on a fairly high South African minimum of $15,000 or $20,000. My preference is to get it offshore. There are cost savings, there's tax savings, and other issues. It is really offshore. If you don't have that kind of money and you're talking about smaller amounts of money and on a regular basis, you can put it into what we call the asset swap funds. You pay in rands, the investment company converts it to dollars and invests it offshore. And that's been a great place to make money, but it comes back to South Africa when you withdraw the money. You can't pay in rands and get your money in dollars using that vehicle. So what we've been recommending to people, use the asset swap until you have enough to take offshore using your 1 million rand investment allowance, and then we will buy the dollars for you and put you into the offshore equivalent of where you were, and then the money is really offshore.
Thank you. And then this one is from Johan, and it says for Magnus or Fred, maybe Fred, you want to have a thought about, you might have a thought on this one. Cloudflare, is it an investment opportunity?
Which is that?
Cloudflare. Do you follow Cloudflare at all?
I do
No.
not.
Magnus?
Never heard of it. I'm still trying to deal with Crowdone and Mirror Trading International. That must be a new scam.
Okay. Yes, before we end off, let's get your views on Crowdone, Magnus. Fred, I'm not sure if you know that it's a pyramid scheme, isn't it, Magnus, that has been using the names of rugby players to spread its scheme.
It's got all the characteristics of a pyramid scheme. It's on euphoria. It's fear of losing out, and get all your friends to join. And the more friends that join, the more you get paid. I spent a bit of time last week trying to get to the bottom of this and trying to find what product they sell. And the only thing I could find that they sell for your payment is a manual how to get other people to join the scheme. Now that's not a product. It's just got all the bells and whistles of a scam. I'm not saying it's a scam, but I would not put 1 cent in that. And I nearly said scam, in the not scam.
Yeah, well, I think that the Financial Services Conduct Authority has warned people against putting their money into Crowdone. And so it's just a reminder to put your money into investments where there's some kind of regulatory framework. So even though trading is risky, you've got all the frameworks in place as well, haven't you, Fred? I mean, when people invest,
I mean, this industry, unfortunately, for better or for worse, is always, when there's big money and there's big opportunities, also a lot of scammers that mitigate to it. And, this has been as old as the woods. I mean, this is not something that's really new for anybody who's been in this industry. I mean, we saw just 10 years ago, this guy, Bernie Madoff, take off with, I don't remember the exact number, was $4 billion or $5 billion. And, he was on the board of the NASDAQ, for God's sakes, so, unfortunately, that seems to be the issue. But, like at the end of the day, as long as it's registered with the FSA, from what I understand, they've been very good about following up on and cracking down on some of these type of Ponzi schemes.
Well, thank you very much to both of you. We're going to wrap it up now. And so thank you, Fred Razak from CMTrading and Magnus Heystek from Brenthurst Wealth Management. And thank you to everybody who joined us today in the webinar. And we'll try and pick up on more of your questions that we didn't get a chance to get to today. So thank you very much.
Thanks, Jackie. Take care. Bye-bye.
Okay, bye. Bye.
Bye-bye. Pleasure.